In this track and trade trading training video, I want to take you through, and I want to go through a trade with you using the gasoline through this nice seasonal uptrend. You'll notice that we're using the seasonal trending market, the seasonal nature of the market, to help us make our trading decisions based on what the market has done in the past 10 to 15 years. Now, over the last 10 to 15 years, we can see out into the future beyond where the market's currently trading, and we can see that this is a rally time for this market. So we want to look for an opportunity to go long this market. We like extremes. We like to look at the market and see where the extremes are. Notice that the extreme, this thing started clear down here and goes all the way into an extreme that rallies all the way into, it looks like May 15th. And so that's kind of our timeline in here. And the market's currently trading right here. I'm going to come in with another line, and I'm going to put it like right here, and I'm going to say, okay, this is our time frame in which we want to look to be in the market on a long position. And we do that because this is where the market has the highest degree of tendency to go on an extreme level, right? This is where we break below this extreme, and we have the strongest extreme right up into here. And so this is our time frame that we're looking at to go along the market. Now, as that market, we look over here, we also see that the seasonal historical averages are confirming that same thought process. Notice that 1 year, I've got the red line is set to last year's prices, so 1 year, and that's what this market did last year. It rallied up through this time frame, and then the 3-year average for the last 3 years, it's kind of rallied up through this time frame. Now, even though the price of gasoline is higher this year than it was last year, we're still going to anticipate the seasonal move, seasonal trend, just at a higher level, at a more expensive level. So we're going to look for the rally right up through this time frame. And the way we do that is we need to get a trigger, something that's going to get us into the market. And now we have the idea, we have the roadmap, we have an idea that this market's going to rally positively for us into a bull market during this time frame, during the next 3 months. So now we need to have some kind of a trigger, something that's going to get us into the market so that we know when it's time to get in the market. Now, I like to use the bulls and bears. Now, the bulls and bears has a very strict set of rules that we follow and anticipate, and we use to help us anticipate these trends and how to take advantage of them. So I like to use the bulls and bears. Now, as we move forward with the bulls and bears, I'm going to use the bulls and bears trading system with a mindset that the market's going to be bullish. So here we go with the bulls and bears. Now, there's a buy signal. Now, that's a wimpy buy signal. It's not a very good one here with the bulls and bears. We like to see a bullish buy signal. And those of you who don't have the bulls and bears should get the bulls and bears so that you can understand how these different rules work. Those of you who do have the bulls and bears, you realize that that was a very weak buy signal. It's also accompanied by a bullish arrow. Now, the buy signal, of course, is the yellow changeover from yellow to green, but that green is an inside day, and it closed lower than yesterday's high. Or yet closed lower than yesterday's low, and of course closed lower than yesterday's high. So this is a weak buy signal, not a very good one. We can either move the market forward and wait for a stronger buy signal, or we can go ahead and say, well, if it breaks above, if it continues higher, then we're going to get into the market with a contract. And we can come in here and maybe get in with 3 contracts because we anticipate that this market's going to rise in price, right? So let's step the market forward. Nothing happened, and there we got into the market. Now, this is a better buy signal. We got in there. Now, the first thing we need to do is we need to protect ourselves. We're going to put our stop order in here. We're going to sell all 3 contracts out if we're wrong, and let that market advance a little bit and prove to us that it's going to continue higher. And as it continues higher, we can either move our stop or leave it where it's at. What I like to do is start breaking my stops apart as soon as I have an opportunity. And one thing we can do is we can come in here and we can say, okay, down here on a lower position, I'm going to put 1 stop. And that means I've got to change this one, settings. Let's take this one over to 2 contracts. Just in case this market stops us out here, see we got 2 different stop positions. Now, as that market moves forward, we can anticipate maybe I'll move this one up to break even, and I'll move this one up to where the other one was. And so now we got 2 positions for stops. We're going to protect some of our positions, and if that market starts to come back against us, we're going to get out with maybe a small loss or a little profit, or if it continues higher, we can take some profits. Now, as that market starts to go sideways, we can make a decision here. We can say, well, this market's starting to go a little bit sideways. What do I want to do? Well, I can bracket this market. And we know that if we bracket a sideways market, the rule to bracket a market is that you sell on a break below the market or you buy on a break above the market. So if the market breaks higher and continues up as we would anticipate in a bullish trend, we can come in here and take advantage of that and say, okay, I'm going to buy, maybe I'll buy another one, add on a position if this market breaks above this little trend, or I can suck this stop right up here close and say if it breaks down, I'm going to get out, and maybe I'll put this one at break even. And now I have two stops to protect myself against the market coming against us, one stop to get into the market if the market continues higher. So this time the market came back against us, got us out of both contracts, and we ended up what with how much? Well, a small profit, $3,000. So at this point we're saying, well, that's not really what we were looking for. We're looking for a big rally, but the market's starting to come back against us. Let's go ahead and clean up these positions. I'm going to delete that open order, and I'm going to turn off the text to these. We're completely out of the market at this point. Let's turn off the text so we don't have to look at those. And now we're going to have to wait for another opportunity to get in the market long. This market's gone yellow, 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 green. That's another buy signal. So at this point we can say, well, okay, we'll go in this market. Let's go in with 3 contracts. We're going to say, okay, if the market fills, and it does, it fills, we're going to set our contracts back. I'm going to set 1. I'm going to come in with 2 right here. I'm going to sell 2 out. Close, and I'll put another one back a little bit further behind the first yellow, and I can say I'm going to sell 1 out here. So that's our 3 contracts. We're protected against that. So let's step the market forward, and as the market starts to move forward in our favor once again, I'm going to turn this text off so we can see what's going on. Now as the market starts to come back against us, we hold. Oh, a very bad day for us. We got stopped out, and now we're down. Actually, we lost on not only our profits, but we also are down a little bit, $8,000. So that was a really bad day for us. But we protected ourselves, and now as we move the market forward one more day, yellow, yellow, yellow. Let's turn this off. This is the way we work. This is the way the game's played. Now we've gone negative. Look at that. We got a sell signal. It's a bullish sell signal. Notice that the close is higher than the previous day's close and higher than the previous day's low. But it's a it's a sell signal nonetheless. Do we want to go short this market? I don't think so. Not now. Not with this really strong rally point ahead of us saying that this market should be rallying. So let's step the market forward, see what happens. Well, it's a good thing we didn't. Now, had we chosen to go short, we could have come in here with a stop order, placed a stop order below that red, and so it'd sell 1 on a stop, and then step the market forward. Of course, it didn't go down. It didn't continue if you want to take that counter-seasonal trend, and so it's not there. So let's come in here and delete that out of our accounting system. We've gone back to neutral again. And as that market rolls forward, yellow, 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 yellow. We don't do anything with yellow markets. It's neutral. Even though we're right here during this big rally time when we're anticipating a big rally, the bulls and bears can tell us when the market's gone neutral. So we just sit and wait for another buy signal. Of course, a buy signal would be a green price bar or a yellow price bar followed by a green, and of course it's also accompanied by a bullish arrow indicating that the market has changed now from bearish to bullish. So let's go ahead and place another order. Let's get in here, and we're going to buy, let's buy 3 once again on a stop if that market's filled, and it's not filled. So let's step forward one more time, and there it's filled. We're going to have to make a deposit because we didn't open our account with enough money. Let's come in here and say we're going to open our account with $50,000 back on April 1st. And now as that market starts to roll forward, we need to place our stops in here. We're going to come in here and sell. We can keep our stops close, all 3 of them, or we can break them apart. Let's come in here and let's put 2 here like we did before. And let's put 1 back behind the previous yellow. And we're going to sell 1 back there. So that's all 3 contracts. So if we're wrong once again, we'll get out. We're going to wait for this market to rally forward, and as it does start to rally, we're going to start to anticipate and move our stops. Here we go. This market's starting to make a nice run for us. We want to start protecting ourselves. Maybe I can bring this one up even closer, put this one to break even, and at this point I can wipe the sweat off my brow. We're actually in good position. We're not going to lose anything if it comes back against us. And so as that market starts to rally forward, I can slide this up one more time. And now maybe at this point we want to hold off and back off and let that market rally. You know, markets have a tendency to move in waves, 2 steps forward, 1 step back. We don't want to tighten our stops up so close that we get stopped out. And there's an example. The market comes back against us. Oh, one more time. We got stopped out with 2 contracts, but we're still long with 1 contract. So we step forward. Oh, look at that. Big yellow comes back against us, but we're still in at our break-even point. Let's step forward again. Where are we at now? Yellow, yellow. Now there's a green. Yellow followed by a green. That's a buy signal. We can come in here. We can add another buy if we'd like to. Let's just add 1 on at this point. And let's step forward. Now we're back in the market again. We can leave this one at break even. And of course it's down here behind the previous yellow. Let's turn off this 2. Come in here and set that stop in there, sell 1, and we're just going to let that market move forward, and hopefully we can get our stop up to break even here soon and wipe the sweat off our brow again. So we're going to step that forward. Come on, move forward for us. I think I can move that up to stop, break even again. Let's bring this one up a little bit closer. Start locking in a little profit on that market. Now that market's come back right on our peak day. Now we're still in the market long. We can suck this one up a little bit closer if we would like. And as that market starts to rally again for us, we can start using these areas of support and resistance as places to place our orders. Or we can turn on our overlays. We can turn on our parabolic SAR, and we can come in here and we can turn on the bulls and bears. Let's go back over to the bulls and bears settings and turn on the blue light system. And we can actually come in here and say, okay, I want this order to be right here until the blue light catches up to it. And then I want it to trail on the blue light system. So there's the blue light. And this one here, I'm just going to have it go to the settings, and I'm going to say trail on the parabolic SAR. Parabolic SAR. And now as the market starts to move forward, those are mathematically calculated stop placements for us. And they will automatically pull in there, and they tell us, of course, right where we should be placing our stops. And as that market moves forward, we're long 2 contracts, and we'll just hang in there until we get stopped out. That's the end of our data. And we can't go forward anymore. And even though we had a really rough start through here, didn't we? We actually ended up going negative on our trade for a little while right through this time zone. But the bulls and bears helped us pull it out, and we still stuck with it in the long uptrend, and we still ended up with a $35,000 profit with 2 contracts up through this little bull trend. So that's how we can use the bulls and bears in combination with the seasonals indicator to help us maximize our trading potential.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and training techniques by industry leaders. This should not be considered as a solicitation to buy, sell, or invest in securities, options, futures, or Forex. Remember, trading does involve the risk of loss. Past performance is not indicative of future results. Stocks, futures, options, and Forex trading is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.